Welcome back, traders and investors. We have a very special guest on today, Phil Pearlman. He is an interactive editor at Yahoo Finance. He's a partner of Social Leverage LLC. He likes to invest in web companies, but he began his trading career with a Datek account and an attitude. Love to buy, fear, and sell euphoria. How did that work out for you, Phil?
That worked out pretty well, man. I had, I would say in my life, 4 or 5 big investments or big trades. I think I made the majority of my money holding for long periods of time and getting in during periods where either something wasn't apparent, or it was early, or where something, where the market was just hated, and everybody was screaming for the door.
Okay, well, Yahoo has just announced an exciting new thing not too long ago about having some new contributors. Can you tell us about that a little bit?
Yeah, so that's my project, and I've been working, for a while, very, very hard on it, and got great support from an amazing team here. Aaron Task, who's the editor-in-chief of Yahoo Finance, and Glenn Fanek, who's the product lead on it, who I couldn't, we couldn't have done it without him. And basically what we're doing is we built a Tumblr theme and have had a bunch of luminaries contribute, create Tumblr accounts and load our theme, and now they're going to begin posting directly to Tumblr. All that content will flow directly into Yahoo Finance. So if they tag something with the ticker, that content will go to the ticker pages. There'll be content on the front page. It's just fantastic. I'm thrilled. We got, amazing people lined up. Josh Brown, Carl Icahn, Ben Carlson, Jim O'Shaughnessy.
Wow.
The chart, if you're a chartist, forget it. I mean, it's just ridiculous. Guys like Chris Kimball and Ryan Dietrich and Ralph Acampora, Greg Harmon. But just an amazing list of people.
Sounds like you're reading the guest list off from our show with all those guys on there.
There you go. I mean, you guys had Carl on?
No, we have a big wait time, so we're gonna probably get him on later. No, I'm just joking. We haven't had Carl.
James Altucher just put out his first post. He hasn't written about stocks. He's been writing about life and philosophy and yoga for the last few years. He just put out his first post about stocks in years, and he kills it. So couldn't be more excited.
Okay.
Really, and it should be fun too.
Okay, let's go to your forte here, and that's the psychological aspects of user experience and the online community development. So, and you've been in, if you had a Datek account, that means you've been trading for quite a long time, and you've seen this entire evolution of social media. So why don't you just comment on what you have observed and what direction things are going?
In terms of what exactly?
Social media. Just having such an impact on the stock market.
Yeah, there's always been information and there's always been noise. And so the tools that we have now that we didn't have years ago maybe make things move faster and information and noise move faster. But it's really, human nature is the same as it ever was. So while the tools are different, while information and noise flow, or I should really say noise and information flow, because I think you have much more noise in terms of quantity than information. That flow, the speed of that flow has changed. However, let me just tell you, human nature is, as long as humans are involved with markets, they're going to be inefficient. There's going to be overreaction. There's going to be underreaction. There's going to be bubbles. There's going to be crashes. So really, honestly, really nothing has changed. I mean, not that much has changed.
I think well, the way things kind of originally started out, I think with the message boards and everything, it was kind of deceiving. There were pump and dump schemes, some of the penny stocks and stuff. But right now, a lot of like information that you're getting about stocks, from Twitter or StockTwits. I mean, do you feel that the information has become more reliable or more substantiated, or because a lot of times when you see something come across a Twitter StockTwits, I mean, in the back of my mind, they're like, well, they're talking good about this stock and they probably have offers out there in the market. Do you think people are things have changed a little bit, and now you're getting the best information, from those social media arenas?
It really depends. I mean, what has happened is now there's more complexity within all systems. I mean, the world has gotten smaller, but infinitely more complex. So the macro is more complex. Information sharing and noise sharing has grown, expanded, and the speed, as I mentioned earlier, and so you have the template, the canvas. I mean, is infinitely more complex. How much information is moving around? How many news events are occurring? So that has changed. And that is, that's neutral, though. I mean, sometimes there's going to be things that are very clear and things that are made more clear by social media channels or whatever. And then on the other hand, there's going to be times where everything is obscured and just incredibly obscured, and that obscurity is going to be magnified because of the way we're able to pass along information so frictionlessly now. But so it's dynamic. I mean, you can't. It's not simple. So you just can't make a blanket statement, and that's how I view it. So everything is a tapestry, and you have to really look at every single situation. I mean, I think in the market today, there are still incredible opportunities that exist if you are really focused on educating yourself in an area and allowing yourself to have an open mind. So
Mixed bag.
it's more than, I mean, it's a tapestry, and it's very complicated, and you have to look at it like that. And there are credible opportunities if you're willing to do the work and focus in a specific area where you have a vision and where you have knowledge and where you have an edge from an informational point of view and from a knowledge point of view. I mean, I study psychology. That was my bag. That's where I got my edge. Other people are engineers. That's where they have their edge. Other people are, in specific industries. If you're an accountant, you're going to understand, if you're an actuary, you're going to understand the insurance business better than a lot of people, right? And so, I mean, it's kind of a Peter Lynch thing to some degree, but, if you're willing to do the work, you could really still find trends that are not fully appreciated in the market. And I think that's where alpha is, and I think I think the best guys still aren't sharing it. When Ackman's on TV trumpeting his short 5 times, "Boy Who Cried Wolf," he's got ulterior motives. It's not just about him being so generously sharing the information and his hard work.
Right. Okay. So let's say this. I'll give you a little example here. Let's say someone is a new trader coming on, and let's say they're retired. They have some disposable income here that they know that they could risk, and there's this whole social media platform out there. There's Twitter, StockTwits, Yahoo Finance, Benzinga. I mean, there's all those things out there. And you don't want to get overwhelmed. What advice would you give to somebody that's coming new in? There's all this information out there. What advice would you give them to filter things? I mean, besides following you, what advice would you give to a newbie that's looking to use social media to his advantages in the market?
Um, it's a really big question, and I think every individual is different, and I think that trading is very hard, and so the thing that you have to do first is be self-aware and understand who you are and what your risks are, what you have to accomplish, what you want to accomplish. I mean, look, if you have 10 million in the bank and you take a million and you create a trading account and you're 65 years old and you just go and putz around and have fun with 10% of your account, great, right? But if on the other hand you're retiring and you have half a million in the bank and you take all of that and put it in a trading account, that's unbelievably dumb. And so perspective is just critical, and thinking about longer term things before you think about how you're going to trade. I mean, I don't see that happening. I see a lot of people with short term time perspectives that aren't really taking into account. I mean, the way that people build wealth is not day trading. The way that people build wealth is spending less than they take in over a long period of time and then wisely putting it away. And riding through good times and bad times. And I think if you do that first, you have your house in order, then you can go and you can play the market and have a good time. And, that's a craft, and you can hone that craft and become good at it and learn to make money. But, if you're just setting out, and you don't have your personal finances in order first. I think this is never talked about among traders, right? And that's why I'm bringing it up, because I think it is, not only really important, but also something that people don't talk about. You have to have your financial order, in place first, and then, your own finances. Then you can go and do your thing, have fun, learn, hone a craft. And from a social media perspective, I mean, that's where you ask the question. There are great people out there who do an unbelievable job of sharing information. They're not responsible for you. At all. They give you a pick that's terrible. That's not their problem. That's your problem, because everybody's responsible for their own actions. But there are great people out there. I mean, you have to be really selective in who you're going to choose to follow, and that's difficult. So it's not an easy thing.
Great answer. Also, Phil, just get into the whole, the psychological aspect of the markets. I mean, I think you can agree with me here that there's really a euphoria here in the market, and it has been here for quite some time. So if you're selling euphoria, I mean, are we at the euphoric point right now in the market where people should be selling, taking profits, or outright shorting the market? Where for all the years that you've been in the market, where are we at on your euphoria barometer?
Well, I think that we have a situation here where we have a very confident market, but it's also very fragile emotionally. So that's such an interesting situation. It's kind of like a narcissistic personality, right? Where you have this ego that's incredibly inflated, and these people that have these sort of grandiose sense of self, but they're also very fragile. And if their ego gets bruised, they get crushed very easily. So I think that's what we have here. We have sort of this robust sentiment, but that robust sentiment is incredibly fragile. And so that, over shorter periods of time and in the present, it's actually a bullish thing. It actually bullies the market, because what happens is you have a few down days in a row and the market pulls back 2 or 3%, and all of this overconfidence becomes fear. It's like overnight, like you flip a switch. So I don't view this as like a classical euphoric situation where people are just ignoring all of the bad news. I view it more as just this sort of put, this fragile ego put, where, in a way, the fact that we're really positive as the market's going up, but then we're reactive to any bad news or any negative market, that is not healthy, right? But it does buoy the market. So it's hard to just get really bearish until something changes, or we just reach this state of euphoria that is just pitch, crazy levels, and I haven't seen that. And I mean, for the record, I'm underinvested. I mean, I'm long. I don't usually short stocks. I usually get underinvested every summer, and that's just a very simple. I'm a simple guy, and it's a simple seasonality play. It didn't serve me great last summer. Really hasn't hurt me too badly this summer, although it hasn't been great. I've been a little bit I probably underperformed the market a little bit, but I really don't care about that. I mean, that, whichever the way the wind blows here, is perfectly okay with me. And if I miss some gains, it's fine. I'm just playing a longer term strategy, and I'm just playing the percentages.
Do you play the social media stocks at all?
I analyze them, and I have traded them, and I've had investments in them. And I even have some investments in private companies. But I don't. Now that I talk about them a lot in the media,
Okay.
I tend to talk about them a little. I tend to trade them a little less, to be honest with you. I just, I mean, it's not really a big deal, but they move, and it's just I comment on them in the media frequently, and
Right,
it's not like I have huge investments that are long-term investments in anything that I talk about. I do have some investments in private companies, but I really don't talk about them.
Right. Well, from a compliance standpoint, so for sure. So, okay, Phil. Well, I can't thank you enough for coming on and talking about Yahoo's new contributor forum that's coming up, talking about some of your past trading, your current trading, the psychological aspects of the markets. Before I let you go, I just got to ask you, do you have, at this point, S&Ps, we just made a new all-time high in 1981 in the futures. We backed off a few points. What's your final advice for the Options House chat room?
My final advice is to take a long-term time perspective and to think about where you want to be in 5 years and 10 years. And it sounds so boring, and there have been tens of thousands of articles written that say the same thing. But until you do that and you're really thinking about that, then, if you're just day trading or trading over very short periods, you're putting the cart before the horse. That's my big advice, man.
Yeah,
that's how you create wealth rather than, hey, I made $3,000 this week. Look at me.
That's great advice, Phil, and we talk about lengthening your time horizons a lot. So once again, thanks for coming on. Have a great trading day, and certainly hope you can find time to come on again.
Thanks, buddy.